Welcome back to my channel, Think CSEC. Today we'll be doing CSEC Principles of Accounts, January 2020 past paper 1. But this is part 2 of, of that paper. So if you haven't yet watched part 1, just pause this video and go right ahead and watch part 1 and come back and watch this part 2. So we're going to get right into it. So we're beginning at question 41. It says, in a cooperative society, the daily affairs are administered by A, all members, B, a majority of shareholders, C, the chairman of the board only, or D, persons elected or appointed to do so. So we know our answer is D. Persons are elected or appointed to do so. So our answer is D. Let's go on to number 42. It says, the owner of a business paid a personal medical bill from the bank account of the business. The amount was debited to the miscellaneous expenses account. Which of the following concepts was violated? A. Matching. B. Prudence. C. Consistency. Or D. Business entity. We know that it is D. Business entity. So that's our answer, D. Let's go on to number 43. It says, a photocopying machine valued at $5,000 is depreciated at 10% using the straight line method. What is its book value after 2 years? A. $4,000, B. $4,050, C. $4,500, D. $4,980. Now, we have to say what is really the straight line method. Well, a straight line method of calculating depreciation that involves deduction on the same amount every every time. So the same amount whenever you're conducting. So what do we mean by that? So first, we're going to have to find 10% of $5,000. After we find 10% of $5,000, we get $500. Now, we subtract $500 from $5,000. There we get $4,500. Now, remember the same amount. So year 2 would be 4,500. Take away the same $500 from that. So we're left with $4,000. So deducting the same amount every time. So that would be our answer, $4,000. A. Let's go on to 44. Here it says, according to the Partnership Act, if there is no deed of partnership, the amount of profit to be received by each partner would be A. Divided equally, B. Calculated at 5% of net profit, C. Calculated at 5% on capital invested, or D. Divided in proportion to capital invested. We know that our answer would be A. It is divided equally. Partnership Act, if there is no deed, the amount to be received by each partner should be divided equally. So A. Let's move on to 45. Which of the following items on a statement of financial position would differ most in presentation when comparing the books of a company and the books of a sole trader. A, non-current assets. B, current liabilities. C, current assets. D, capital. We know it is our capital. So D is our answer. Let's go on to 46. It says, the reward of profit received by a shareholder in a limited company is called A, interest, B, drawings, C, dividends, D, commission. We know it is called dividends. Dividends, C. Reward of profit received by a shareholder in a limited company. Let's go on to 47. Here it says, how does an increase in bad debts affect a sole trader's financial statements? A, decreases the gross profit. B, increases the gross profit. C, decreases the net profit. Or D, increases the net profit. We know it is C. It decreases the net profit. Let's go on to 48. Which of the following accounts are nominal? A, wages and rent. B, machinery and plant. C, payables and fixtures. D, inventory and receivables. So, what do we recall from nominal accounts? Well, we know nominal accounts are accounts in which expenses, revenue, and capital are recorded. So, with that in mind, we know that our answer would therefore be A, wages and rent. Let's go on to 49. Which of the following terms best describes the final accounts of a non-profit organization? 1, income statement. 2, receipt and payments account. 3, statement of financial position. A, 1 and 2 only. B, 1 and 3 only. D, 1, 2, and 3. We know that statement of financial position, that is not a part of our answer. So the terms that best describe the final accounts of a non-profit organization includes the income statement, receipts, and payments account. So A. Let's go on to number 50. It says, an example of a capital expenditure is money spent for A, paying rent. B, paying wages. C, purchasing goods. D, purchasing a new building. So we know that our answer would be D, purchasing a new building. Let's move on to question number 51. It says, the purpose of an appropriation account is to A, show how the net profit is distributed in a partnership or cooperative chain or a let me read it again. A, show how the net profit is distributed in a partnership or a cooperative. B, change capital expenditure as agreed upon in the Articles of Association. C, enter all capital and revenue expenditure as stipulated in the partnership account. Or D, make appropriate changes related to net profit as agreed upon in the Articles of Association. Well, we know our answer is A, show how the net profit is distributed in a partnership or cooperative. So our answer is A. And Going back to question 50, why did we select D? As we know, capital expenditure is when a business spends money to buy or add value to a fixed asset. So I should have included that in 50. Capital expenditure is when a business spends money to buy or add value to a fixed asset. Let's, let's move on and go to 52 now. It says, if revenue expenditure is overstated, which of the following terms will be affected? A. Sales. B. Surplus. C. Inventory. D. Working capital. So we would select A. Sales. Let's move on to 53. When writing up the books of a partnership, which account must each partner have? A. Bank. B. Current. C. Savings. D. Fixed deposit. We know that it would have to be a current. Each partner would have to have B. Okay, let's move on to 54. So item 54 refer to the following information. Here we have a manufacturing J. Baines manufacturing account for the period ending 31st of December 2017. We have our information here. Inventory of raw materials, 1st of January, 800. Purchases of raw materials during the year, 4,500. We had a total of 5,300. Then we less our closing inventory of raw materials on the 31st of December 2017, 1,400. We are left with 3,900. Productive wages, 1,300. Fuel and power, 900. Lubricants, 100. Rent and rates, 400. Insurance, 200. That brought us up a total of 6,800. And here we have our balance carried forward would be 6,800. What are the questions now? It says, what is the cost of the raw materials consumed? A, $800. B, $1,200. C, $3,900. D, $4,500. So, how do we arrive at our answer? Well, how do we know what is our raw materials that was consumed? Let's look back. So here we have it. So the amount of raw materials that was consumed is $3,900. So our answer is C. C. Let's move on to number 55 now. Item 55 refers to the following table, which shows balances of the asset accounts of the Baying Club as at 30th of June 2019. So our assets are our premises, 5,400, equipment, 1,825, furniture, 960, bank and cash, 1,640, inventory and refreshments, $72. So the amount of the club's accumulated fund was, so our total, when we add all of that in total, we got 9,897. So D is our answer. Let's go on to question 56. Here it says, salaries paid to the administrative staff in a factory would be classified as which of the following types of cost? A, manufacturing. B, indirect. C, direct. D, prime. So What are manufacturing account? Well, we notice all of them are a part of manufacturing account. So option A would be out. What is an indirect cost? Well, indirect costs are all those costs which occur in the factory or either in place where production is being done. And that is why this no, it cannot easily be traced to the items being manufactured. Now, what about, so for example, we have like wages and cleaners or salaries, we have rent and rates of the facilities, and so on. What about direct costs now? No direct costs. It is possible to trace the cost of making an item to the item being manufactured. So it is possible to trace it, the cost. What about prime? Now, prime cost is really the sum of all the direct costs. So we know option D would be out, option A would be out. So we know 56, our answer would be C. Sorry, did I say C? B, indirect. It's an error. B. Our answer is B, indirect. Let's go on to 57. When a company declares a dividend of 15%, the dividend warrant of a shareholder owing $1,500 ordinary share is A, $100, B, $225, C, $1,500, D, $1,515. So when you find 15% of $1,500, we get $225. $225. So our answer is B. Let's go on to 58. Prime cost is $79,110. Office expenses $3,000 and factory overheads $4,720. How much is the cost of production? A, 4,720, B, 74,390, C, 83,830, or D, 86,830. Now, as we said, prime cost is the total cost, total sum of direct costs, right? So we know that our prime cost is 79,110 plus 4,720 because our prime cost would have already included our office expense. So that $3,000 is a little confusion that CXC is trying to present. So our prime cost, for us to know the total cost of production, we add prime cost plus the factory overheads, and we therefore got 83,830. So our answer is C. Let's go on to 59. Okay, it says item 59 refers to the following list of balances. So here we have work in progress, 1st of January 1600, work in progress 31st of December 1700, cost of materials used $3,000, indirect expenses 3,200, factory wages 5,000. Using the list of balances above, what is the cost of goods produced? Is it A, $8,000, B, $8,700, C, $11,100, or D, $11,200? So, how do we calculate this? Now, as it says, the cost of raw materials used, there we have $3,000. Then we have our indirect expense, $3,200. Then we have our factory wages, $5,000. Then we have our work in progress at the 1st of January, which is $1,600. So when we add all that total, we get 12,800. Now we are going to less our closing work in progress at December 31st, which is $1,700. So when we less or take away $1,700 from $12,800, we're left with $11,100. So our answer is C. Let's go on to 60, final question. It says P. Amos is employed by a construction company at a rate of $7 per hour. During a week, he worked his basic week of 40 hours. The income tax due on his pay is $20, and he is also liable to pay national insurance contributions of 5% of his gross pay. What is his net pay? A, $246, B, $260, C, $266, or D, $280. Well, we're given the rate $7. It was 40 hours, so 7 times 40, that is $280. Now, he had an income tax due, which was on his pay, that was $20, so you would less that from it. And $20 take away from $280, we're left with $260. Now it says he's liable to pay national insurance contribution, which is 5%. So 5% of $280, which we worked $7 times the 40 hours. So 5% of $280, we get $14. And then we subtract the $14 from the $260, we're left with $246. So that is his net pay that he would be taking home. A, $246. So this is it. We have come to the end of the January 2020 CSEC accounts past paper 1. So don't forget to like, share, and subscribe to the channel. Until then, see you in the next video.